Newspapers can tell fascinating stories. And I don't mean just the articles, I mean the front page. Let's show you the front page of the Times of India on February 19th, a full-sized Paytm ad. The company is currently on the regulator's radar, so Paytm wanted to assure its users. Now look at today's front page. Founder Vijay Sharma quits Paytm Bank board. How about that? Last week he was reassuring his users. This week he himself is out. So tonight we're looking at some important questions here. What changed between then and now? Why did Vijay Shekhar Sharma quit? And what next for Paytm? First, some context. Paytm Payments Bank is a subsidiary of Paytm. It was founded in 2017. Vijay Shekhar Sharma, the Paytm CEO, owns 51% stake in it, more than half. The rest is with the parent company. Recently, the Reserve Bank of India, that is India's central bank, pulled up this company. Why? For a number of reasons. Customers were not being verified properly, balances were not being maintained, and there was no separation of operations, meaning the payments bank was too close to Paytm. So the RBI put its foot down. It asked Paytm to stop all banking activities by the 15th of March. No new deposits, no credit transactions, and no new accounts. Which brings us to the latest news. Vijay Shekhar Sharma has quit the Paytm Payments Bank board. Some new faces have been brought in, 2 former bankers and 2 former IAS officers, administrative service officers. The idea here is to placate the Reserve Bank of India to show them that progress is being made. Earlier, Vijay Sharma was wearing too many hats. Paytm CEO, Paytm's largest shareholder, also chairman of Paytm Payments Bank. By resigning, he's telling the Reserve Bank of India, look, we have separation now. Paytm and the bank can be separate. But will the RBI buy it? Well, the market is confused. When the news came in, Paytm shares shot up. At 9:15 a.m., it was trading at 419 rupees. By 9:25, it almost reached 450 rupees. That's a 7% surge in 10 minutes. But since then, there has been a correction. Paytm shares have lost those early gains. So the investors do not really know what to make of it. On paper, this could be a step in the right direction, but the worry is that it won't be enough. So what happens next? Well, that depends on the RBI. We don't know if the Reserve Bank will be satisfied with this one change. They haven't said anything yet, but if they're not satisfied, more changes may have to be made. Maybe to the ownership structure or internal governance or the leadership. Whatever it is, it has to be big. It must convince the Reserve Bank that Paytm and the Paytm Bank are now separate and that the bank is now an independent entity. And who can make that change? Vijay Shekhar Sharma himself. His corporate rise is a story of grit and determination. Born in Aligarh to school teachers, very basic primary education, but a drive to succeed. He attended college at the DTU, the Delhi Technology University. Later, he rode the dot-com wave. He founded a couple of startups and sold them for good money. He created Paytm in the year 2010. But at first, the company struggled because Indians were not quite familiar with digital money. Cash was still king. All that changed in 2016. The Indian government demonetized higher denomination notes. Demonetization. The main goal was to fight black money, but it made digital money popular in India. Suddenly, everyone was on Paytm. You could find their QR codes at local shops. Bill payments went online. Indians were not transferring money anymore. They were Paytming it. All of this added to Vijay Shekhar Sharma's personal growth. He featured in the Forbes 2022 list. His net worth was $1.2 billion, but today he's in a lot of trouble. And you can't say it's a surprise. The RBI has pulled up the Paytm Payments Bank before, even fined them for violations, yet Sharma did not change things. So this RBI deadline is the culmination of many warnings and fines, which is why one board rejig may not be enough. And when banks go down, it's a very scary affair because a lot of money is at stake. A lot of lives and livelihoods are at stake. If you're a Paytm customer, I know you have questions. So we'll end by answering some of them. Number one, will you lose your Paytm bank balance? No, you won't. The RBI order does not affect existing deposits. You can withdraw the money even after the 15th of March. But can you deposit more money? Again, no, you can't. No new deposits and no new credit transactions. That's what the RBI has said. What about your vehicle FASTags? The tag itself will keep working, but after the 15th of March, you cannot recharge or add money to it. So I guess closing it is the better option. Finally, what about transactions? Can you still scan and pay? Well, Paytm is the third largest UPI platform in India. They handle some 1.6 billion transactions every month. 1.6 billion. Only Google Pay and PhonePe do better. So the company is in talks with other banks. Reports say at least 4 of them: Axis Bank, State Bank of India, HDFC Bank and Yes Bank. The idea here is to migrate Paytm Bank users to new UPI IDs. I know it all sounds very complicated, but that's the world of banking for you. You trust banks to do their due diligence. You also trust regulators to keep a watch. In this case, only one party did its job.